Yes, we faced in 2010 very, very difficult markets, especially on the European markets because of the European economies. In the middle of the year, we had the markets moving down very sharply because we thought that a double dip was coming from the US economies. The government debt in Europe have been an issue still for the markets in 2010. At the same time, we had very good results from the companies, especially European companies, because they did a very good job of restructuring. And more than that, they benefited from the growth in emerging markets. So, one in one, we face quite a difficult year. Okay, those difficult markets are really a paradise for stock pickers, especially for value investors. And especially when we apply a very strict discipline and a very strict process that we used to apply in our fund management. In terms of performances, the range of our fund did between 12% in absolute terms, this is for Eurozone large cap, up to 38% for small cap, pan-European small cap fund. For Métropole Sélection, which is our flagship, we did a very nice 17%, comparing to an average performance for European market of 6%. So we're quite happy with the performances we succeed to have last year in 2010. Yes, 2011 we think will probably be a difficult year again. Maybe less difficult than in 2010. Especially for the American economy, we think that the growth will be probably a little bit better than what we saw last year in 2010. For European economies, we'll probably have a very slow growth and high volatility because the problem of the government debt is still there and probably will give a lot of volatilities in the market. The very good news is that we visited a lot of European companies recently, and they're still in a very good shape. The business is doing quite well, and we think that those markets will give the opportunity for value investors again to do a very good stock picking. So we're quite confident in the performances that we could give to our funds and to the investors again this year on the equity side, European equity side, but also on the corporate bond side again, because companies are also in a very, very good situation and have very good balance sheet on the opposite side of government debt. So we're quite confident, and even if we still have a lot of doubt on the growth of the economies worldwide, even in emerging markets, we think that in terms of stock picking, we could deliver very good performances.